Did you know that a single investment into the S&P 500 would have turned into $33,568.30, putting you in the top 13% of all investors over the past 10 years? While those numbers are clearly impressive, every Friday at 8 a.m. Central Standard Time, I share a small list of dividend stocks that have left the S&P in the dust and have metrics to support that could keep on doing so.
Tell me your secret.
Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and congratulations. You just found the only weekly stock list you're ever going to need as a dividend investor.
That alone is the Holy Grail.
In this series, not only do I provide you with super high quality lists you won't find anywhere else, but I'm also fully transparent on any stocks I've mentioned in the past so you can see if I'm onto something with these lists. If at any point in this video you feel like you're enjoying yourself, don't forget to leave a like on the video and don't forget to tap that subscribe button so you can keep up with these lists weekly. But now that you're all on the edge of your seat with anticipation and you want to get to this week's list, let's go ahead and jump right in with number 5, Boise Cascade, stock ticker BCC. This is now the second time I've mentioned BCC in these types of lists. The last time I mentioned it was on May 31st of 2024, and it also came in at number 5. And if you go back to when I first mentioned this on May 31st of 2024, BCC is actually underperforming the S&P 500 by a little bit since then, but let's go ahead and get a refreshed update on the numbers behind this stock and see how it's performed over the long haul. BCC is a quarterly payer in the material sector, paying 84 cents per share per year with a forward dividend yield of 0.61%. BCC's been paying and growing their dividend over the past 6 years. They have a 3-year dividend growth rate of 26%, a 5-year dividend growth rate of 18.67%, and a payout ratio of just 6.97%. At the time of recording, Boise Cascade was trading 10.35% off of its 52-week high. It has an ex-dividend date of September 3rd with a payout date of September 16th. And looking at this chart, you'll be able to see the growth of $10,000 both with and without dividends being reinvested in this stock versus the S&P 500. Looking first with the dividends being reinvested, BCC would have turned into $65,333.59, outperforming the S&P 500 by $31,765.29. Down at the bottom, BCC would have brought back $53,437.18, outperforming the S&P by $22,645.41, and the difference between reinvesting and not reinvesting those dividends was $11,896.41. Coming in at number 4 on this week's list is Insperity, stock ticker NSP. Now, this is the 4th time I've mentioned this stock, and if you go back to the very first time, all the way back on September 2nd of 2022, this stock came in at number 1 on that list, and since then, NSP has actually really disappointed me, bringing back $9,023.27 on a $10,000 investment. So it's actually lost money versus the S&P 500 over the past, a little bit under 2 years, which is really unacceptable to me, but I still have high hopes in this one, and I'm going to show you the metrics behind why. So NSP is a quarterly payer in the industrial sector, paying $2.40 per share per year with a forward dividend yield of 2.56%. NSP has been paying and growing their dividend over the last 14 years. They have a 3-year dividend growth rate of 11.87%, a 5-year dividend growth rate of 18.23%, and a payout ratio of 43.26%. Now, at the time of recording, Insperity is down 21.63% off of its 52-week high. It has an ex-dividend date of September 5th with a payout date of September 19th. And here's the reason I really believe in this one long term. A $10,000 investment with the dividends being reinvested over the past 10 years would have turned into $80,472.97, which outperforms the S&P 500 by $46,904.67. And down here at the bottom, without reinvesting your dividends, NSP would have still turned into $72,548.60, which outperforms the S&P by $41,756.83. And the difference between reinvesting and not reinvesting those dividends is $7,924.37. So I still do have hope for this one, even though it hasn't performed great over the past 2 years. It is at a discount currently, and I do believe that the metrics it currently provides can provide some good upside going forward in the future if you give it a long enough time, but that's why your own research is key in these videos. Coming in at number 3 on this week's list is Holuhan Low-Key, stock ticker HLI. This is now the second time I've mentioned this stock, with the first time being back on August 26th of 2022. That was also in my top 5, where this stock came in at number 4. HLI, since mentioning it, has actually crushed the S&P 500 at a return of $20,269 $14,294.72 versus the $14,294.91 from the S&P. So let's go ahead and see why this one outperforms the market by so much with the refreshed update on the numbers behind this stock. HLI is a quarterly payer in the financial sector, paying $2.28 per share per year with a forward dividend yield of 1.47%. HLI has been paying and growing their dividend over the past 9 years. They have a 3-year dividend growth rate of 16.07%, a 5-year dividend growth rate of 14.67%, and a payout ratio of 34%. At the time of recording, HLI was trading just 0.92% off of their 52-week high. They have an ex-dividend date of September 3rd with a payout date of September 15th. And looking at this chart, over the past 9.04 years, HLI would have turned $10K while reinvesting your dividends into $84,427.02, which outperforms the S&P 500 by $52,827.07. Down at the bottom, without reinvesting those dividends, HLI would have still brought back $74,721.16, which outperforms the S&P by $45,383.65. And the difference between reinvesting and not reinvesting those dividends is $9,705.86. And we're now halfway through this week's video, and you know if you like it or not. If you didn't leave a like earlier in the video, please make sure you're doing that now. And then I'm also curious, down in the comment section of this video, after the video is over, let me know if you guys own any of the stocks mentioned in today's video and how they're doing for you. And if you don't own any of them, let me know which ones piqued your interest. But now let's get to number 2. Coming in at number 2 on this week's list is Old Dominion Freight Line, stock ticker ODFL. This is now the 7th time I've mentioned this stock on this channel, and if you go back to the very first time I mentioned it on February 24th of 2023, ODFL is actually underperforming the S&P 500 in that time frame. So let's go ahead and get a refreshed update on the numbers behind this stock and see why I'm still so confident in this stock long term. ODFL is a quarterly payer in the industrial sector, paying $1.04 per share per year with a forward dividend yield of 0.51%. ODFL has been paying and growing their dividend over the past 8 years. They have a 3-year dividend growth rate of 38.01%, a 5-year dividend growth rate of 35.69%, and a payout ratio of just 15.67%. At the time of recording, Old Dominion Freight Line was trading 10.55% off of its 52-week high. It has an ex-dividend date of September 4th with a payout date of September 18th. And looking at this chart, you'll be able to see why I have confidence in this stock going forward long term. A $10,000 investment while reinvesting the dividends into ODFL would have turned into $93,338.46, which outperformed the S&P 500 by $59,770.16. Down at the bottom, without reinvesting those dividends, ODFL would have still brought back $92,002.91, outperforming the S&P 500 by even more at $61,211.14. And the difference between reinvesting and not reinvesting those dividends into ODFL was $1,335.55. And coming in at number 1 on this week's list is Lind, stock ticker LIN. Now this is now a record-breaking 9th time I've mentioned a stock on this type of list, and you can see before I've mentioned this stock going all the way back to 2022, and if you go back to August 26th of 2022, Lind is outperforming the S&P 500 since I first mentioned it. So let's go ahead and get a refreshed update on the numbers behind this stock and its market-beating performance. LIN is a quarterly payer in the material sector, paying $5.56 per share per year with a forward dividend yield of 1.19%. LIN has been paying and growing this dividend over the last 31 years. They have a 3-year dividend growth rate of 9.63%, a 5-year dividend growth rate of 9.41%, and a payout ratio of 32.54%. At the time of recording, Lind was trading 2.51% off of its 52-week high. It has an ex-dividend date of September 4th with a payout date of September 18th. And a $10,000 investment while only reinvesting the dividends 10 years ago into Lind would have brought back $216,648.13, outperforming the S&P by $183,079.83. Down at the bottom, without reinvesting those dividends, Lind would have still turned into $208,349.53, outperforming the S&P by $177,557.76. And the difference between reinvesting and not reinvesting those dividends is $8,298.60. With that being said, if you made it here to the end of the video, but you're watching this video on or after September 2nd of 2024, you need to make sure you're subscribed to the channel.
And
Why is that?
Well, that's because some of the ex-dividend dates I mentioned in today's video might have already passed, which means you just missed the next dividend for these stocks.
You should have led with that.
Well, that's not the end of the world. Waiting 3 long months for your next dividend really sucks, so don't let that tragedy happen to you and make sure you're subscribed. Before you go, don't forget to use that comment section down below to let me know if you guys own any of these stocks and how they're doing for you. And if you don't own any of them, did any of the stocks mentioned in today's video pique your interest? And if you enjoyed this video and you want to see more super high quality lists just like this, make sure you check out this video right here. But until next time, see you.